Alrighty. Good morning, guys. How we doing? How we doing? Some nice downside today. All right. So far, some nice downside. How's everyone doing? Good morning. All right. Yeah, you got some casino names pushing higher this morning. That's like the only thing that's green. Some of these casino names, LVS, Win, some of those casino stocks. So, we'll see what happens. All priced in. Well, you have to see when does everything get priced in? Probably not yet. There's going to be an inflection point. The point where we got to move down to price it in and then see when we start to hold. So, right now, still some downside on tech, still pretty weak. We got bank earnings this morning. Nice downside on those. Well, not all of them. JP Morgan, Wells Fargo actually holding up pretty well. Not really moving that much, but Wells Fargo holding up. You got Citibank report. You got you buy or sell. I'm confused. That's not a question you answer. You have to take it day by day. I mean, I'm not selling my long-term shares. Absolutely not. So let's go ahead and sort of walk through what's going on today. So as of right now, we got downside on the tech market, downside on the overall market. Tech's getting hurt the most. Tech's down 1%. YM and S&P down about 0.6, 0.7. So you can see that that overreaction to the downside on tech, which is common. We've seen that been going on for quite a while now. Last night we got China retail sales last night. So you might see some reaction on some of the Chinese names. You saw a little bit of a pop higher on like stocks like Baba overnight, but BIDU had a little bit of a pop higher, but now they're pushing back lower. So you had Chinese retail sales last night. You're gonna have our USA retail sales here at 8:30, and then you had bank earnings this morning. So you have a few things going on today. You have retail sales yesterday for China, retail sales this morning, which we should watch the retailers off of that, right? Target, Walmart, Shopify, all of those. I guess Shopify not really, but it gives you an idea of the sales of the spending, the retail sales. That is this morning at 8:30, and then we got the bank earnings. So we'll look at all that today. Right now you're getting downside. I think just continued pressure from yesterday. And yesterday we just had some nasty rejections in the morning off of some very key levels. We just sort of slipped from there. So let's go ahead and take a look today, guys. So we're going to look at futures as always, economic calendar. So I'll pull that up real quick so you guys can see. Today we have retail sales at 8:30. I think that will definitely be important. You can see we had here we go right here, retail sales at 8:30. We'll see what happens off that. So 8:30 we will pull up the charts to see if anything looks interesting then. We had bank earnings this morning, right? So let me pull that up for everyone to see. Here it is. JP Morgan, Citi, Wells Fargo, BlackRock, and First Republic Bank. So all banks here this morning here on earnings. So we had those. And then we have, like you said, like the casino stocks. So that's what we're going to look at. And then we're going to move into some of the names, right? So perfect Tesla rejection. I'll show you guys the chart. Absolutely perfect head and shoulders formation on Tesla, and it's getting rejected. Pretty nasty. Also, news yesterday on Tesla delaying the Cybertruck. Believe that was yesterday as well. Let me try to find that. Here it is. Tesla delays production of Cybertruck to 2023. So, delay of the Cybertruck yesterday for Tesla. Not good, right? I mean, not that big of a deal probably, but definitely will cause some reaction. And then Baba, we talked about that 140 level, right? We've been talking about Baba 140 here every single day of the week. We hit 140 right around there. I think we probably hit a high of, what did we hit a high of? We hit a high of around 138, 139, and we fell right off of it. So I'm definitely watching BABA today for downside off that rejection. Watching this 133, 133.50. Where was that? Oh, it was the gap. That's right. Okay, I'm just making sure I'm remembering this. The gap fill level, right around 133.50. So you guys remember we were talking about the BABA gap fill. The gap was filled, and now we're moving lower off that rejection. So we're going to look at BABA. TSM, you guys may or may not know, I'm in put options from yesterday. So that's looking pretty nice today. And I bought these for a few reasons. We'll walk over them. If you didn't watch it, my video yesterday, you can go ahead and watch that. I'll also go over it briefly here in the live stream, why I took those put options. Then we will go over casino names, right? So you have some upside on Wynn, on MGM. You have some upside on LVS, and you're getting some news as Ike is putting in the chat for you guys to see on some casino names. Pepsi, Coca-Cola, holding up beautifully. So there's always a bull market somewhere, right? So if we go to the chart real quick, like just really quick looking at this, Pepsi, look at this chart. Pepsi, Coca-Cola, just still going up. Why? Consumer staples, value, places that people want to put their money when you see tech stocks moving lower. So keep an eye on those, right? Caterpillar holding well. We'll look at that. And then I just put this at the bottom, Apple, Microsoft, NVIDIA. I think everyone wants to do some analysis on those three. They're very popular. And we'll just run through some analysis on those three names as well. Well, as we go through today, we'll try to find some other opportunities. I'll move off the schedule a little bit if we find anything good, anything that's sort of urgent. And then, of course, guys, if you are a member of the YouTube channel, if you press that join button down below, you'll see it below my screen, I believe. You'll see where it says join. If you want to join the YouTube community, you can get access to the Google Docs. So if you guys are a member, make sure to go ahead and put your tickers in the Google Docs. And then before we get started, just to remind everyone, the market is closed Monday. No trading Monday. Take your weekend, 3-day weekend. Market is closed. That could also be why we're seeing a little bit of weakness as we approach a long weekend. Sometimes you'll see that decrease in volume, that sort of downside sort of weakness when you get into a 3-day weekend. So that could be why we're seeing some of this too. So just remember that. No market on Monday. Alrighty, let's get started. Let's go ahead and get started. So guys, NASDAQ, we talked about the push off 15,150, right? And I believe I was very clear, at least in my opinion. I was trying to get across what I was thinking. I was looking, as you guys know, I was taking some call options like on NVIDIA here and down in the 15,150 area, and I was getting out of them as fast as I could, right? I got out of them the next day. I did not believe that this market would actually push back to highs. I felt like there would be a temporary push higher because of this overreaction to the downside all the way down to 15,150. But I did not trust this thing to just keep going, right? There's really no catalyst. If you guys are wondering why tech is getting so beat down, if you just think about it logically, there is no catalyst for tech to move higher right now, right? There's nothing working for tech. You have a lot of pressure against tech. You have interest rate hikes, tapering. You have, fear in the market. You have people looking for value, people looking for safety. There's a very large amount of investors, or just not any type of incentive to be putting your money into high growth names, putting your money into speculative names. I know stocks like Apple and Microsoft may get a little bit more value than traditional tech names. Let's say, for example, some riskier ones like, let's say, what's a good example? What's a riskier one? Maybe like a smaller cap, like Zoom or Roku or PayPal. Those stocks are just getting sort of demolished. There's just no incentive to be putting your money into these names right now. The market is not accepting that. The market is not wanting to have money in these names right now. It's about value. And so when I saw this push higher on the NASDAQ, I was very speculative. I did want to take some short-term opportunity, but I was not going to hold this thing expecting new highs. That was definitely not my plan. So yesterday and over the last 2 days, we rejected off 16,000. 16,000, we talked about this level. we got a nasty rejection off this level. So right here over 2 days, right in this 16,000 level, was just a nasty, nasty rejection. Psychological level, psychological 16,000 resistance. On Wednesday, we pushed into it, rejected. Yesterday, on Thursday, we pushed up into it again and rejected. And once we got that double top at 16, it just felt like this market was tired, and it just felt like we were not going to get much momentum yesterday. And that's why you're starting to see this weakness come in, right? So 16 and 16, major level. We talked about this psychological level, and it just couldn't break through. So when you see such weakness at that resistance, you know this market is going to lose steam, right? So you lost steam yesterday, and this morning you can actually see we're rejecting this level here at 15,550, right? So support, support, support. Look at what it's doing right now, guys. It's turning this previous support 1, 2, 3. Look at those support levels. Look at what it did this morning in the pre-market. Turned it right into resistance. So that is very crucial. That is why you're seeing this rejection again, this move to the downside again. Just a very clean rejection of previous support right here in the pre-market today. So, very nice rejections. I think the next level we're watching now, guys, is 15,150 again. I really do. I think you're probably going to see if we continue to be weak by today and into close into next week. I think you're going to see a test of 15,150. I really don't see why we would hold up here until this level, right? Remember we talked about this last time. There's not much structure in this area below 15.5 and over into 15,150. There's just really not much in this market. So I wouldn't expect the NASDAQ to get much support until around this 15,150 again, to be quite honest. So I would be watching this. I would be watching these previous highs from back in July and August and seeing if we move back down to that level today. That's going to be pretty nasty. It's another 200 points, but we shall see. So I think you do have room down to the 15,150. Be aware of that. If we go to the 5-minute chart, you guys can see right here, right? 5-minute chart over the last few days. You got your push higher. You got your support at 15.5. You got to push off of it, but then you just rejected like a brick wall up here at 16,000. Little double top, getting move lower, rejecting previous support. You have to assume that we probably end up trying to test this support again, right? That is my assumption. My assumption is you move back down to this 15,150. So I'm going to watch that today. So downside support, 15,150. Upside resistance has to be this 15.5 again. I would be surprised to see us get back above this level here. That would be pretty surprising to see that. If we could get strength to push through this, that would be pretty astonishing. Maybe something changes today that we're not expecting. But right now, that would be the resistance I'd be watching. So that's the NASDAQ. Just remember, guys, it's a very weak tech market. There's just not a lot of catalyst. My opinion, and I think a lot of people in the chat, what we've been talking about, I think it's earnings that we're going to have to see. I think the earnings is what we're going to have to wait for. I think that is potentially our next catalyst. If these tech names come out with really good earnings after being so weak for so long, so if you have some of these really beat down tech names, and if they come out and put some good earnings on the table, maybe that is what gives us a little bit of catalyst back to the upside. So that is definitely worth watching. All right, ES. A very clear triple top here, very clear just brick wall resistance right here at 47.40, right? So 1, 2, 3, look at that rejection. Look at how clean that rejection came in yesterday. You guys can see it right here. Very similar to the NASDAQ, little double top here at 47.40. And since then, we just lost that steam, right? So if we go to the daily chart, we can see we are technically starting to lose. We had a little bit of an uptrend here. If we use the wicks, we can sort of see we had a little bit of an uptrend forming right here, and you're starting to potentially break below it. So watch out for that on the ES. I would not be surprised to see that move lower after that triple top rejection. You can see we're starting to push down lower. Where do I think we can move down to? I would just be watching these previous lows of these candles. And also I'd be watching this 45.40 area, the September highs. So daily chart, the 100 SMA, if you take the trend off, what you guys are going to be looking at you can see the 100 SMA here. That would be the first level, and that also aligns with these previous lows, right? So right around 45.70. 45.70 would be my first watch to the downside. Right there, 45.70. After that, I would look at the September highs. September highs right around 45.40. That would be my next level to see if the ES can hold at. After that, I would be using these previous lows right around 4,500. 4,500 even would be my next watch. So those are the three levels that I'd be watching to the downside today, guys. 45.70, 45.40, and 4,500. You have some previous structure at those levels. There definitely is some support here on the ES. I would be very surprised to not see it hold any of this support. So those are the levels I'd watch on the ES. On the Dow, we did give up 36,000. We did double top here. You guys can see at 36.3. Resistance yesterday, big resistance there. We broke below 36. Dow's a little bit more tricky because it's a little bit, pretty choppy here, to be quite honest. I would watch these September highs, August, September highs, 35.5. That would probably be the level that I want to see. I want to see the Dow hold right there. Those August, September highs right here. If you move this to the right, I'd want to see us hold right in this area here, right around that 35.5. If we break down there, if we break down below there, you get a pretty choppy area of price action here, right? There is really not much of structure in this area. You have some of these previous highs right here, you could say, right around this 34.8. But besides that, this is a very choppy market between 33.8 and 35.5, right? So, you'd like to see this 35.5 hold as a structure point, but if you do not see that, you're getting back into this big chop fest that we were in for a few months. So be aware of that on the Dow. You'd like to see the Dow outperform. That would be the good thing, right? The good scenario for this market right now would be tech weakness. Let's accept it. Tech is weak. Tech is not hot right now. No one wants to be in tech, especially not the questionable tech stocks. But what you would at least want to see is money flowing into somewhere, money flowing into Dow. You want to see the Dow strong, at least if you're seeing tech weakness, because that's at least giving you the confidence that there is money flowing into other specific names. There's some strength on the Dow, which we have seen. We have seen that, right? The Dow is clearly outperforming here versus the NASDAQ. If you go to the NASDAQ, look at the chart difference, right? That's the NASDAQ. This is the Dow in an uptrend. So you want to see that Dow strength at the very least. If you see weakness across the board, then people are just, really taking risk off the table. So let's see if there's any strength on Dow today. A little bit of rotation. That would be nice to see. Last but not least, I know everyone gets mad when I don't look at the Russell, even though the Russell does the exact same thing every single time. Russell, rejection off 22.8, just moving lower. Would not expect there to be much small cap strength in this market. This is not a market for small cap strength. It's just, no one's really buying small caps. They just don't. I don't think a lot of large investors want their money in questionable small cap stocks. And that is why you have just not seen any strength here for the last few weeks. So maybe you get that technical bounce off 2100. Maybe you get that technical bounce off 2100. But if you do not, if you start to see this could be pretty nasty multi-year lows. This would be a low since back in March. So I would be very careful on the small caps, guys. I just don't see the catalyst for people wanting to put money into small cap stocks. All right. That is the futures. Let's go ahead and we know economic calendar. We know bank earnings. We can go ahead and run through some of the bank earnings this morning. So JP Morgan, quarterly profits drops 14%. Not good. Worse than expected Q4 sales. The banks have so many numbers to go through, so I'm not going to go through every single number, right? Because they have so many different sectors of their banks. They have investment banking. They have, all these different loans. So they have a lot of different things. Equity markets, fixed income, banking revenue, net interest rates. So we're not going to go through all of it, but overall, the top headline here is quarterly profits drops 14%. And you are clearly seeing the downside there, right? Look at that downside. So here's the 4-hour chart. you can clearly see we moved higher off of some interest rate hype, a little bit of hype around the banks off the higher interest rates. But this is a pretty nasty downside move. Now, is this an opportunity? Maybe. Maybe it is. Maybe it is an opportunity. What do you guys think? You think this is an opportunity on the banks? Are you confident on banks through the 2022? Are they an outperforming sector? Maybe. But this chart's just really crappy, man, to be quite honest. It's really hard to trade this off technicals. You did have a little technical breakout here, but for the most part, it's been a pretty sideways stock. Banks have been just not really favored much, and you're getting a move back down to 161 this morning. So I would just watch the price action today, see if there's any support. 157 seems like the level you want to see hold, right? You have resistance, resistance, resistance. You want to see that turn into support again right around 157. So that's JP Morgan. They reported this morning. Wells Fargo reported this morning as well. What did Wells Fargo do? Revenue miss. Profits soar 86%. Wells Fargo quarterly profits soar 86%. Revenue miss. Consumer banking, lending revenue up. Equities revenue up. So yeah, they did better. They had a 1.38. Oh yeah, their EPS, a big beat on EPS. 1.38 versus 0.66. It's a pretty big beat on EPS. So I think that's why you're seeing a little bit better of a reaction on Wells Fargo. You can clearly see the stock has not dropped. It has sort of held up, not making much of a move. And I just don't know. I don't know if I'm confident in Wells Fargo holding up if the XLF falls off today. If you see the XLF fall off today, which you are already seeing, this is the ETF for the financials. If you see that fall off on the XLF continue, I don't know if I can imagine a situation where Wells Fargo holds this move. So just be careful of that. I know Wells Fargo is doing a little bit better, but be careful of it being taken down by the overall sector. Citibank down $2 this morning. You guys can see down as well, pretty nasty. Citibank profit falls but beats Wall Street targets. So their profit fell quarter over quarter, but they did beat the expectations. So you're seeing the downside there on Citibank as well. You have BLK, which reported as well. BlackRock, they are moving down as well. So right now, it's not I wouldn't say it's very hot for the financials this morning. So we'll see if that continues, but just wanted to run over that for you. Make sure to watch the XLF, guys. Make sure to watch that overall ETF. See what that does today. All right, Tesla with just the prettiest rejection I've seen, and I really do regret not taking this. I was up on the day yesterday about 500, and when I get to that point, I'm done, man. That's it. I've learned, so many times of why it's so important to just take your profits and walk away, because it is very easy to give back profit, guys, especially in this market where there's a lot of volatility. And when I'm up, anything over 500, I usually say, that's it. Put the mouse down. Go do something else with your day. Don't give this back. And sometimes, unfortunately, that does make me miss out on some really good opportunities, because this was a fantastic opportunity. Look at how clean this rejection was on Tesla, right? Perfect head and shoulders. Left shoulder, head, right shoulder. Perfect rejection yesterday. Aligned with market weakness. And look at that move. I mean, I'm assuming people made thousands and hundreds of thousands and maybe even millions of dollars on this drop. So big drop, big drop, perfect rejection. I mean, it was clear as day. Look at the day over day here. Look at the day over day. Look at that resistance on Thursday or on Wednesday, and look at what happened yesterday morning. Just a perfect resistance, double top, fail, perfect entry. I'll show you the perfect entry on Tesla yesterday. It was right here. You had these previous lows right here. Look at that. This is the perfect put entry. When you see something like this, guys, this is a break and retest, but it's just inverted, right? So you had push higher, rejection, pull back, right? Break of low of day, push back into low of day, and a perfect rejection right there, right? That is your signal right there. The fact that we broke low of day, We tried to get back above and rejected. That is the perfect downside put play right there, right off that $1,100 rejection. Psychological level, previous low a day, perfect rejection. Very nice. That was a great play right there. So, looking back at this chart in hindsight, of course, I wish I was playing this because that was pretty damn clean, I will say. Yeah. So Tesla downside, right? Back down to 1,000. I would be just a tad bit careful today, trading more downside on Tesla into 1,000, right? If the NASDAQ does really get demolished today, which, who knows, maybe it happens. If it does, maybe you do get your slip through 1,000 today. Maybe you can catch a little bit of downside under a $1,000 flush. That is possible. But don't let your mind forget that there is very tough support in this area, right? There is definitely support in this area at 1,000. I don't want to see anyone get into puts for an $1,000 break and get absolutely demolished to the upside. So just be careful. This is not right. So you coming into today, you should not be as excited to play downside as if, maybe yesterday, right? This rejection at these highs, that looks juicy. Here looks a little bit scary to me, because you don't quite know yet if this is going to hold 1,000 or not. So is the margin for opportunity better today versus yesterday? Absolutely not, right? You need to be careful, trying to squeak out more downside after a stock just dropped 10% on a day. That is almost like playing upside. It's the same thing. Playing upside after Tesla goes up, $200 a share is not ideal. It's not as juicy, right, as playing as getting in before it starts to, getting in a little bit higher when it starts to reject. So just want to make that, put that on your mind today. I don't want to see anyone come into today saying, hey, I'm trading Tesla puts. And then you see it move into 1,000 and it pops like $10 a share and your puts get, a 0 DTE put on a $10 Tesla pop is probably like 50% loss in like 30 seconds. So if you're playing 0 DTE puts on Tesla today, and you get stuck in one of these classic Tesla pops that happens within maybe a minute or two, that is a very nasty and makes you very upset. So just be careful of that. I just want to make that a fair warning. Watch that $1,000 level on Tesla. BABA. All right, guys. So you remember we were talking about the BABA gap fill, right? We were seeing that gap that was created here back on Wednesday. This was the gap right in this area. Right, you had this gap up right here on BABA, and I said we just gapped up. We pushed into a 140 resistance, which I believe is a very tough level, right? Because you can see right here, previous lows turning into resistance. It's working out perfectly. A very hard level to get through, starting to reject off that 140. We gapped up into a 140 level. That's very tough. We go back to the 30-minute. And we are starting to, and we got that gap fill, right? So we got that gap fill right here at this gap. Excuse me. We got that fill. And then, after getting that gap fill, congratulations to anyone that did play that yesterday. We are now rejecting this 133.50 area, right in this level. So you have these previous highs right here, previous highs, and then look at what happened yesterday. Look at what happened yesterday at 133.50. If I go to the 5-minute chart, where did we reject intraday yesterday on BABA? 1, 2, 3, triple top intraday. Why did we reject off that triple top intraday? It is because we had previous resistance, and we couldn't get back above. So in my opinion, I think this looks quite bearish. Now, where could this move back down to realistically? Maybe we need to fill this. We sort of already filled that gap, actually. So maybe we just come back to these previous structure points right around 128 and maybe even down to this 126 area. So I'd probably be targeting maybe this zone right here today, 128 to 126. Be careful in here because there is probably some structure, previous highs, support. So I would assume that there is a little bit of support in this area. So be aware of that. But if we do get that continuation on downside after the gap fill, after a rejection at 133.50, then I like to see if BABA can move back down to 126. So that's something I am watching today, looking to see if BABA can get a little bit more downside off of that rejection. All right, we got retail sales right now. Let's quickly jump over to that. If we get any, so it looks like are we getting a pop off of it? A little bit, nothing crazy. Let's see. This is so 8:30, guys. Retail sales are out. Let me see if I got the news here. Let me go to the SPY. Retail sales are down. Retail sales month over month. Is that a negative 1.9? So that's a pretty big drop. All right. Is that a negative? Yeah, negative 1.9. Estimated. So, wow. That's surprising. That's pretty bad. All right. You were expecting minus 0.1. You got minus 1.9. Previous was up 0.3. Excluding autos, minus 2.3. Wow. All right. So I'm assuming we should see a negative reaction off that. Let me go ahead and look at yeah, Target just gapped down, didn't it? Did Target just gap down? I think Target just gapped down there. What did Walmart do? A little bit of Walmart under pressure. What else? Shop moving off that? Nah. Target, what's Costco? Yeah, Costco getting a little weak there because of it. So watch your retailers, guys. Watch your retailers today. That could be a pretty easy. That could be a pretty easy way to play downside on retailers. See if that continues, and also watch BABA, because sometimes BABA will react off retail sales. We've seen it before. Amazon might be a good downside play today off that. Watch out for Amazon to the downside as well, if we get that continuation on retail sales downside. So maybe watch Amazon under this 3,200. So yeah, retail sales not good, guys. Not looking good there. Let's see if there's any continuation. Watch your retails. Watch your retailers. See if that continuation comes in. Again, don't just buy puts because retail sales was down and you say, hey, it's going down. It's not how you trade. Wait for the continuation. Wait for the confirmation. Wait for some rejections to come in. Trade it smart. I know there's a catalyst for it, so it makes you believe that it's going to happen. And I'm not saying it won't, but I just want to see people be careful. It's not just like hey, retail sales were down, I'm buying puts at open. That's not how you do it. So just be careful of that. All right. TSM. Yeah, it could be some nice downside action today. I'd like it. I would like it. If it's an easy downside, I'll accept it. If it's an easy downside, let's go for it. All right, guys. So as you may know, I got into TSM puts yesterday, right here in the Discord, right? I post all my trades in the Discord. Yesterday at 3 o'clock, got into some TSM puts, 140 puts at $1.70, looking for the gap fill back to 132, 134, right around that area, 132, 134. So I got into those yesterday, and they are looking fantastic. One of the reasons I got into it, first of all, was all-time high, and we failed at all-time high. On the daily chart, very nasty candle. That's just like a death candle there. Not liking that candle at all. When I saw that start to form, I said, hey, this might be a good idea. Next, if you guys look at this line, you see this white line on your screen, 142.20. Let me show you something. That's not magic, but if we go to the intraday chart, where did TSM reject intraday? Where did TSM reject intraday? Right at previous all-time highs. Is this magic? Is technical analysis fake? No, it is not. Why would it reject here? The reason is because it was previous all-time highs and it could not get back above previous all-time highs. When I saw that around 3 o'clock, I said, hey, I like this. I think this is a rejection of all-time highs. I think this is a rejection intraday of all-time highs. And on top of that, I know that there is a gap on the chart that I can go ahead and try to target back here at 132, 133. So that is my goal with TSM. If I start to see it push higher off the low of this candle, 135 at market open, I'll probably just take my profits, to be quite honest, because these are already $5 in the money. So I should be profitable at open. If I start to see the thing pop and it not really continue that downside, I'll probably just take it. But if I do see it crack 135, then I think you're coming back down to 132 relatively quickly, guys, to fill this gap. So that is something I'm watching. That's a position I'm in. Let's see if you get the gap fill today. All right, casinos, Wynn Resorts. You got to pop. I'm not sure if it's going to hold, but you got some news this morning. Got some regulations in Macau. Shares of casino major Wynn MGM, Las Vegas Sands at pre-market after Macau released plans changes to its territory's regulations, including a shorter term per license and an increased local ownership in the casino firms. So just looks like some positive news for casinos overall. Got to pop off of it on Wynn. Let's take a look at the daily chart. Nothing that exciting, to be quite honest. But what are we at? We're at 90. Yeah, I mean, you're right in this resistance here, right around 90. So be careful up here. Why? Because yes, XLP is consumer staples, if you guys are wondering. You have previous support turned into resistance. Just be careful trading Wynn as we push into that resistance, right? If I go to the 4-hour chart, you're going to see. Look at where we're at. We're right back at that resistance. So just be careful of Wynn there. Maybe it gets through. LVS, a little bit of a pop as well. Chart's not that hot. Wouldn't be the first one in line to trade this, to be quite honest. Just not a good looking chart. Downtrend, right? Pretty nasty downtrend. Are we testing that right now? Let's see. What are we at? 41. Yeah, we're starting to try to break through it. So right here, you guys can see we're trying, but we're still rejecting, right? The body of this candle is down here, is below that downtrend. So downtrend, we're starting to reject that downtrend. So be careful here, guys. I know there's some catalyst, but just be careful. MGM's the last one. Barely a move here on MGM. You can see right there, looks like $1. Here's the chart. I would, I know there's a catalyst here. It's my duty to show you guys what's going on, but I would stay very clear of these names. It just doesn't seem like there's very much juice to squeeze out of these names right now. Maybe I'm wrong. I could be definitely wrong, but just looking at these charts, it just doesn't look like a sector that I'm interested in trading. All right, next, Pepsi and Coca-Cola, just two monsters, right? If these two stocks are heavy in the XLP, consumer staples. If we go to the XLP, right, the XLP is Procter & Gamble, Pepsi, and Coca-Cola. Those are the top three names in the XLP. And if you guys go to these charts, there is always a bull market somewhere, right? Look at what Pepsi has been up to in this market. Pepsi has continued to move higher off the 20 SMA, which is a very strong trend. Now, I will say, you're starting to see a little bit of heaviness up here, a couple wicks on the daily chart, so be careful. However, I just wanted to bring this up, guys, because I want people to understand that, when the market falls, I think a lot of newer people, newer traders don't understand, the idea of rotation or understand the idea of hot sectors and weak sectors, what's moving up, what's not. There's always going to be something moving up, typically. Not always, but typically there's going to be something. And right now it is these value names. Low PEs, value, giving you good dividend, sort of those boomer stocks, right? So Coca-Cola, Pepsi have been on good runs. Now, how long does this last? It won't last forever. When tech starts to heat up again, which it will, guys, the world is not over. Tech will heat up again in the future. And when it does, you're going to see these stocks move back lower because all of the money that flowed into Coca-Cola during this time is going to think about cutting and taking profits and putting money back into tech. Because that is where people traditionally want their money for high growth. So just wanted to bring that up. Got a few, got some strength on a few of these names. Another one is Caterpillar. You guys can see, look at Caterpillar's performance recently. It is down a little bit this morning, just with the overall market, so that is to be expected. But just wanted to bring this up because Caterpillar is a Dow name, which could probably be getting a little bit more momentum. And you can see right here, nice little push, retest of 220, previous resistance, and a push into this previous lows. Now, I'd be a little bit careful at these levels. Why? Because you have resistance, you have support, and that support will most likely turn into resistance here as we push into 226. So I wouldn't be buying this today, but I would at least be watching to see if there is continued strength on the Dow. Any outperformance on the Dow Jones should help CAT move higher. So just wanted to bring that up today for you guys to make sure you're aware of that. All right, the last few stocks we're going to look at from me is just some, traditional tech names that maybe you guys will want to see. And then we will go over some of the stocks that you guys put in the Google Docs. If you guys could, take a second, press that like button for me. That would be greatly appreciated. If you want to subscribe to the channel, that would be greatly appreciated as well. I always appreciate any support I can get on the channel. Help me grow the channel if you guys are enjoying it. I need your guys' help to do that, right? I need your likes and subscribes. If you guys are willing, I would very much appreciate it. So let's go into the last three that I have for you, and then we'll get into your guys' names. Apple. Where do I think Apple moves down to? I think Apple's probably coming back down to this 168, right? Your fault out at Baba too. Yeah, that was a good one on Baba, the 140 level. So right here, guys, on Apple, I'm going to assume that we move back down to the 168. That is my assumption. You got a little bit of a head and shoulders here. I got to assume if the Nasdaq's weak today, you're probably going to see 168. So watch for that 168. If that breaks, you're going to get a little bit of, you might see a little bit of extended downside, maybe to this 161 right here, these previous highs. So 168 would be the level I'd watch today, guys. If you can catch Apple to the downside before 168, that's fantastic. If you are trading puts into 168, just be cautious. I just want you to be cautious. If you're trading downside, guys, you need to know support levels. If you're trading upside, would you trade upside without knowing where resistance is? It's the same. Flip it around. If you're trading some puts today, if you're not someone that's familiar with puts, or maybe you're thinking about, maybe you want to start learning more about playing downside, you need to have where is their support, especially on the daily chart. Because the daily chart, if you're not aware with how time frames work, support on the daily chart is major. That's major support. That is levels that you need to be careful around. 168 is a level you need to be careful around if you're trading downside on Apple. So just be careful. Watch that today. NVIDIA is surprisingly very weak for the last few months. I am very surprised by the weakness we've seen on NVIDIA. I think NVIDIA probably just moved too much, and it's just time for this thing to go back to bed, honestly, because this move was pretty obnoxious. If you guys remember that, it was like free money back then. But NVIDIA just had another very harsh rejection yesterday off 285. You guys can see that right here. So you have previous highs of, previous resistance, and that resistance just just kept this thing down yesterday again. So push, rejection, under support now at 270s. If you drop below, what's the body of these candles? The body of these candles is 270, 260. So I would assume 260 psychological would be your flush point today. Watch for that 260 psychological. If we go to the 5-minute chart, you will see that back on Monday, we started to hold this area. So I would probably watch the 260 psychological level and then the Monday lows. Those are two levels that I would be aware of in this area as you play downside on NVIDIA. Watch out for this zone here because you see this previous support. Be careful trading downside into that zone. However, if we do crack that area, I would assume NVIDIA, like every other stock that's coming back to major support, I have to assume if this market stays weak, that NVIDIA needs to come back down to 230. It almost feels like it needs to at this point. I just don't see why NVIDIA would hold support in this area. It just does not make sense to me, reading price action, knowing technical analysis. There's really not much reason for NVIDIA to hold this area. There is no support here. So I don't like to trade like long dated put options, but I almost feel like that would be a good play, just to play long dated puts back to 230 on NVIDIA, because I just don't know how it would hold here unless the NASDAQ just rockets, which would be something that I would not expect to say the least. So watch that 250, 260 area, 256, 260. If you crack below that today, you're sort of in free land here for downside. I do not see why it would hold here. Back to 230. All right, what's the last one? Microsoft. So here's why I'm talking about NVIDIA like that. Why am I talking about NVIDIA? Why do I say 230 on NVIDIA? Microsoft is the reason. Look at the Microsoft chart. Where did we pull back to? We pulled back to structure back in August and September. If we go to NVIDIA, we have not pulled back to that structure yet. This is potentially an arbitrage opportunity, right? Not so much arbitrage because you're not taking advantage of like inefficiencies, which is what arbitrage is. But it's almost like an arbitrage opportunity because you can say, hey, Microsoft is back down to those August lows. It's had the structure. It's came back down to structure back in August, right? Nice downside. Why is NVIDIA holding up here? All right. Maybe that's your opportunity to look for this downside. So this could be some opportunity here. Guys, remember, I am here to share thoughts. I'm here to share ideas. I am not telling you to do this. I don't know if I'm right. I'm just looking at the charts. I'm telling you what I think about it, and you have to make your own assumptions. Trading is not following other people, but I am just sharing with you what my mindset is. If I see Microsoft back down to that structure, then it makes me believe that NVIDIA could also move down to that structure. So Microsoft back down to 305. I like that. I'm going to be buying shares of Microsoft here. You can laugh at me all you want. I don't really care. I know that I'm going to be, just fine in 20, 30 years. So I like this area for Microsoft shares. I'm going to be picking some up. If it moves lower, it moves lower. I really don't mind. Dollar cost averaging is a very powerful tool. Maybe if we break 305, maybe we start to see 290s or maybe even down to 280s. That could be a possibility. But I would be very surprised to see this 305 just, crack back down. But I mean, we're below it. So, I don't want to be in denial. We are below it. Support hasn't held. So maybe we move back down to maybe the 295s, 280s. We'll see what happens. If we go to the weekly chart, you can see we are below that 20 SMA. That 280 is right there at the 50. So maybe that is your area to look for. But that is what I have. Let's go ahead and go into some of the stocks that you guys want to look at. So we got GPS, Netflix, CMG, Upstart, mRNA, and TLT. So let's go ahead and look at those. If you guys could take a second, press that like button for me. That would be fantastic. All right, GPS, Gap. Gap, trading Gap right now. It's like scary. So 16, that would be a level I'm watching, right? On the weekly, you can see that 16. You're starting to bounce off of it. That's not bad. I like that. You can start to see that. And you can see that there's a huge gap on the chart. So maybe there is a play up here, back to 22. What's TSM doing? Yeah. But guys, I just don't know what's the catalyst for Gap to move higher. I mean, who's buying Gap right now? Besides maybe like day traders. So I don't know. I would stay away from this. There is just no reason. Look at this. Look at the candles. It's just no volume. Why expose yourself to this? I wouldn't even dare to touch this stock, to be honest. Now, I know there's probably opportunity, maybe to the gap fill, or maybe you reverse right here back to the downside. Of course, there's opportunity in every stock, but I just don't even, I don't even know how you, it's just no volatility, no volume. Just watch out for the 19 resistance, look for the 16 support, and then watch for this gap fill. If you start to break over 19, maybe you get the gap fill. Netflix. Yeah, we are back to pre-earnings levels right here. I think you're referring to. So Gap is getting to NFTs. Great. Even more of a reason to stay away from it. So Netflix just gave it all up, man. We talked about this, and it's just getting crushed. So Netflix gave it all up. Here's your pre-earning. They're not last earnings, but the earnings before. There's your earnings levels right around 506. You also have the 100 SMA on the daily chart. I'm sorry, on the weekly chart. That's a big level. 100 SMA on a weekly chart is a big level. So I would watch this 500 area, yeah, for support. But of course, guys, it's going to come down to what the NASDAQ does. So here you go. Just a big rise and fall of Netflix. 506 right here. That would be the level I'm watching. That would be the level I'm watching right here at 506. If you flush that, maybe more downside. CMG, Chipotle. This 1550 level was a nice level, but it has officially been broken. So you broke that level at 15.5, right? 1, 2, 3. Rejection down below it. Pretty hard to say where it moves down lower. I mean, I don't really. This chart's a little bit tricky. Let me get some more time here. Let's see if I can look at where I think this could move down to. Probably these previous highs here. Yeah, you have some previous highs that turned into resistance here, right? Resistance, support, support, support. If you see that downside, I mean, you don't have much structure in this area, right? This is sort of just chop. So watch this chop on Chipotle. There probably is potential to this 1375, unless this market obviously, tries to push back into the 1550. So, when you're around these support areas, there's always a chance that it tries to push back into it. If you get one day that drops below, maybe there's some opportunity for a quick push back into it, an attempt to hold. So be careful of that. But you are getting into a pretty nasty little chop area that really doesn't have much structure. So Upstart. Yeah, guys, Upstart's it was a good time, but it might be ending here. Okay. JJ, take care of this guy. I don't say your name. Why? So Upstart 4-hour chart. All right, previous lows right here. You guys see that, right? Damn it. I hate when I do that. Previous lows right here around 130. It's not a perfect close here, but you guys can see. Previous lows right here at 130, right? And if you push back into it and you turn it into resistance, that is a potential rejection point, right? So you break down, turn it into resistance, and move back lower, making new lows. That is something that does not look good to me. So I would look for downside on Upstart. Where do I think this can move back down to? It's crazy to think that it can even move any lower, to be quite honest. But it definitely can, right? It do go down. So that previous low is broken. Maybe you watch these previous highs here of around 104, and maybe you just watch the 100 psychological today, guys. So yeah, I would just watch, I would watch the 104 and then the 100 psychological level, but this is a very clear rejection, a very clear break of previous lows. What I would ideally like to see on Upstart, here's your perfect scenario today on Upstart. This is scenario number 1, perfect scenario. You get a little bit of a push, you push back higher, and you reject off those previous lows. That is scenario number 1. That is ideal downside play right there. You get a little bit of a downside move in the morning. You get a fake out to the upside, get some sellers to sell, get some buyers to get trapped, get those people chasing it to the upside, get them to get trapped into this. Then you reject off the previous lows. You push that thing back lower. Everyone that bought here starts to sell. Everyone that's short selling it jumps in, and it's just an explosion back down to the downside. So that's what I'd look for. A little bit of a fake out to the upside at 108, rejection off previous lows, and then your tank. There's your game plan. mRNA is a biotech and it's crap. I would stop watching this stock. That's my honest opinion. My honesty comes out sometimes. I don't like trading biotechs. It's just a waste of time. I mean, obviously there's opportunity, so I shouldn't say that. I take that back because there's a lot of money to be made on this stock. So take that back. But I just don't like how biotechs trade. Maybe you get some downside to this 186. I'd watch that 186 level on mRNA. TLT. So here's your 20-year bonds. You guys can see, I don't really like doing technicals on bonds because it's more of a thing about what's going on with the economy. So at least I would at least watch these previous lows here. You would want to see the bonds hold up here above 141, right around 140, 140. I think that's your critical level there. But I mean, doing technicals on bonds is, to me, a little silly. You're going to trade. I mean, if you really want to trade bonds, go ahead. I think buying the TLT is more of a hedge against like a certain thing going on in the market, right? That's why people buy TLT, because they think the market's going to go a certain way. They're buying it for a reason, selling it for a reason. I think that's more of how you use the TLT to your advantage. I don't know if the TLT is a great way to just trade off technicals. AbbVie, you guys know I sold it yesterday, 400% profit, nice profit. Saw it break under these lows, and I saw XLV start to break down. When I see XLV breaking down like that, I don't want to be in healthcare, and AbbVie, it was time to go ahead and get out of it. So I think you probably get downside here, especially if the healthcare sector still unravels. You broke down below a pretty important level. So watch for that downside in AbbVie. Yeah, Josh is really good for bonds. Shout out to the Colt. Josh definitely knows more about trading the TLT than me, guys. I don't really pay attention. I pay attention to the TLT, but I don't trade it, or I don't use it as a trading mechanism, as a trading vehicle. I know Josh does a lot more. Just my personal thing. Yeah, go! Shout out to the Colt. You guys, that's a perfect lineup. Come here for the morning. Go hang out with the Colt after. Let him know I sent you, even though he has no idea who I am. But I like Josh, cool guy. I grew up for the last how many years listening to him. So, all right, that's it for me, guys. If you guys are a Colt member, press the like button. You got to support. I really like the video that Josh made a couple months ago about supporting people on YouTube, whether you like them or you don't. I don't know if you guys remember that video. I watched it. I think it's very true. So always support him and anyone else that's doing things online, for at least genuine people trying to help. I don't have an ungenuine bone in my body. I come from an Italian family, very tight-knit. I just don't, it's not who I am. So here to help, guys, whenever I can. Reach out to me if you want. I reply to my Instagram. I know a lot of people don't, but I try to reply to all my Instagram messages as long as it's not, within means. It's not like 1,000 of them. So reach out to me if you want on Instagram. If you have any questions, let me know if you need anything. Chest to the sun. Shout out to the Colt. Long-term chair. All right, guys. Have a great day. Be safe out there. Have a great long weekend. Remember, markets close Monday. And I will see you guys on Tuesday. All right, guys. Peace out.